Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you. Well, congratulations to almost everybody who bought and held E-Trade over the last 10 years. You're getting taken out this morning by Morgan Stanley. So we'll talk about the details of this deal. We have a number of earnings on our radar as well, and we are going very long on the show today. We have four guests. We have an 8:15 guest, Marc Chaikin, an 8:35 guest, Alan Brochstein, a 9 o'clock guest, Tim Seymour, and a 9:15 guest, Michael Salaman. He is the president and co-founder of GrowGeneration. And with the latter three, we'll be talking cannabis and what to expect at the conference next week. And with Marc, we'll get his overall market thoughts. So a lot going on the show today. Joel, what's going on in the overnight markets?
More for your money, Spencer, right? Oh, that's
it.
right. We don't charge anything. Pre-market high is on 97.50. Pre-market low 76.50. Currently trading down $6.50 at 33.80.75. Man, love to see the close here. The all-time closing high from yesterday, 33.87.25. That lines up nicely with mid-range on the session. I think you see some sellers at that level. On the downside, don't have much for you. We did take out the intraday low from yesterday at 77.75, but not by much. Your real good support comes in at 33.70. Crude on the march here, up 54 cents at 54.03. Gold continuing its breakout over 1,600, up 780 at 1960. Silver in the green by almost a penny here at 1832. And Bitcoin at 10,000 level now acting as resistance once again. Nearly 9,500 contracts have traded so far. So Triple D, another merger for you to trade.
Yeah, another big one. This is one I was trying to trade it from the long side for a while, just keeping it long in my overnight portfolio. And this was back obviously October, November. I was like, somebody could come back in and scoop them up. I wasn't long in overnight here though. Wish I would have been. I've been always thinking it too. Like he used to write me even a sticky note: do not be short E-Trade just in case, even in the overnight portfolio. And here it is. So I guess I should have stuck it in the long-term account, not looked at and reaped the benefits, but did not have it long. Wish I would have overnight, but this is not surprising at all. I mean, E-Trade was the target that was left, so I'm not surprised. The only one left now, you would think maybe, is Interactive Brokers, but I'm not sure. They have they have as much customer base as E-Trade or Ameritrade, so I'm not sure they're attractive as or as attractive. But the stock's been trading up. It's up $1.50 here this morning. You're saying, Spencer, you were saying on the pre-market show, that's the last publicly available public retail broker?
Interactive Brokers, yes.
Interactive Brokers is really the last one. I mean, you got, like you were saying, Schwab, but nobody's buying Schwab. I mean, so IBKR would be like the last man standing, one of the retail brokers. So keep an eye. ETFC, though, getting taken off the board. Give us the details.
Details for this morning, the big news of this morning, it is a $13 billion deal, or $58.74 per share. It's an all-stock transaction. So for people like Dennis who trade the ratios, the ratio to know this morning, E-Trade shareholders will receive 1.0432 Morgan Stanley shares for each share of E-Trade that they own.
I like it when you come bearing gifts like this. This is excellent.
Yeah. So Dennis,
I love all stock deals.
Dennis, explain what I just said.
So that's your ratio. So if you want to calculate the price of E-Trade on any given time versus Ameritrade, bring up your trusty calculator, which I'll do with you right now. Take the current price of Morgan Stanley, which is, let's say, 54.50 times that ratio that you just gave, which is 1.0432, will give you a price for E-Trade of $56.85. And if you go look, it's trading at 56. So the risk arbs are putting about an 80-cent discount on the deal here right now for a risk that this deal doesn't go through. But I usually let the dust settle on day one. I don't usually trade these things just right off the hop unless you can trade the news event, which is usually pretty tough to get and beat those high frequency traders. But after the fact, Jack, second day, third day, I start to get down and dirty in these. And sometimes there's some opportunities at the open, at the close, sometimes even intraday if there's a big move fast. I mean, the high freaks are pretty much all over it, but there is opportunities, and I do like trading risk arb.
So what do you do? Well, first of all, do you have that sticky note that says don't be short E-Trade?
I actually was writing it down on my paper for a while.
Okay.
But it's been, what are we, like almost 4 months past the merger? I've kind of, it fades, the worry fades, but I was always in the overnight portfolio because, I buy and sell things overnight. If I think something's trading too high after hours relative to fair value, I don't think there's news, I'll sell it. If I think it's too low, I'll buy it. I do get down and dirty, but I did not want to be short E-Trade on any given night. Whenever I even saw E-Trade trading up a little bit, I was like, no, just in case. And here it is, February, and I'm glad I'm not shorted overnight. Wish I would have been long. I've always been biased. Like I said, if I could buy that thing any night, where I thought it was, trading at a discount, I would do it. And obviously intraday, you don't usually see these things announced intraday, so it's only the overnight risk that
you gotta have it. Yep.
Stock's up $11, so those who are speculating that this might actually get taken out eventually, they had to wait a while, but eventually they got rewarded.
Why? What do you think? Is it the order flow? Is it the customer base?
Customers, yeah, because you think about what they can do and how they can sell. Obviously there's still payment for order flow, so they still can make money in those regards. But I mean, it's just the customer base. You now, bring them into your full service brokerage here. You can upsell them to Morgan Stanley. I mean, here, you've got E-Trade. Well, maybe you want to come to the full service broker. There's all different ways. I mean, from an interest rate, they still make money. Like the retail brokers were still making money. We know they lost the commission revenue, which was significant, but they still make money from payment for order flow. They still make money from the interest that they have on your accounts, and they're just bringing in so many more accounts. So when you saw Ameritrade go off the board, you figured eventually probably E-Trade is going to be the next target. So people were rewarded if they were speculating 4 months after the fact.
And according to the Journal, the ones who broke the story, Morgan Stanley's been eyeing E-Trade for a while. James Gorman, the CEO, had been eyeing them since he was at Merrill Lynch in 2002. He tried in 2007 when he came on with Morgan Stanley, and it wasn't to be in the midst of the crisis, but he finally got his white whale.
Hey Dennis, what's the all-time high in E-Trade? And don't look at your chart.
Oh man, 60?
Okay.
That's just popped in my head. I don't look at my chart. I'm saying 60.
That's what I thought, and it's very wrong.
It's very wrong. What's the all-time high?
300.
No, really? What?
Yeah, I know. Did they do a reverse split?
I don't remember an E-Trade
342.50.
reverse split.
342.50.
I don't remember an E-Trade reverse. When was that?
It was guess. You get one guess.
Financial crisis?
No, bigger. Besides the financial crisis.
Tech bubble.
Yeah, 342.50.
I did not know they did a reverse split.
Did they?
I don't remember that.
He's not saying they did.
Oh, wait, though. Go back to 99. Go further, Joel. I see over 700. Go back further. Go to 99.
My chart won't do that.
700, and I'm just eyeballing. It looks like about 710. So maybe they did do a reverse split. I mean, this was, tech bubble burst, and I can remember E-Trade, anything online, and you had an online trading company, and they were us all over these things from a valuation perspective. In 1999, it looks like this thing went from $50 to over 700 in 1 year. The bubble of all bubbles. And if you held on for 20 years, you didn't get your money back.
August 14th, 2015, they did a 70-for-1 reverse split.
Did they really?
Yeah.
When was that? What year?
2015. That's what I'm seeing here.
I don't remember that either. Why did they do that? That wasn't even a tough year. I don't know. I can't remember it. I don't remember that either. So I'm not going to argue with you if you got the headline.
Oh, I Googled it, so I don't know. But let's cover a few stocks here because we got a lot of guests coming on, and we got some movers here. So let's
so obviously Morgan Stanley is moving down with it. Remember, risk arbs will sell, and now it's just all about that ratio going forward, the 1.0432. So they do the immediate adjustment, bring the E-Trade price up, bring the Morgan Stanley price down to get it somewhat in line with that 1.0432. That's the risk arbs doing their work right off the hop. and then going forward, we'll remember that. But yeah, jump in with
One more
lots of earnings here. Where do you want to go?
No. I just want to do one question. Do you leg into those, or do you put the orders in simultaneously?
No, you just get in there. So it's no like easy side, hard side on it. Sometimes when I was trading like VIA versus VIA B, you do the hard side, which is the illiquid one, the VIA. Those are both the illiquid. If the ratio gets out too much, you just put it on. But it's day one, the high freaks, they're all over this right now. I don't expect to make any, unless you were on that initial headline, but they halted it. So the high frequency traders are all over it from that perspective. So usually day one, I lay off. Day two, day three, you sometimes get opportunities. Often at the open, maybe a stock opens too high or opens too low. That's usually the best opportunity. In E-Trade, and for instance, E-Trade trades NASDAQ. So that's even better because NASDAQ doesn't give opening price indications till 9:28. So what you'll see is, Morgan Stanley's giving you a good price. While, all of a sudden E-Trade opens too low, then it can get an opportunity. So sometimes there's an opportunity there. Don't expect to just, make your whole living trading something like this. Like back in the day, I could make my whole living trading one deal. JP Morgan Chase Manhattan, that's all I did back in like 2004, 2005. But I was the high frequency trader back then. So, the thing gets out to lunch. I had algorithms running on it. Now that my algorithms would be way too slow to compete, with the, millions of dollars in algorithms that your big guns like Virtue and Citadel are using. So it's UBS. It's hard to compete because I don't have hundreds of millions of dollars of programming at my disposal.
All right. I'm sorry. I digressed again. Go ahead, Spence.
You want to do pizza or stamps?
Stamps. Wow.
Yeah.
Come back. Come back. Holy. This is the comeback story of the last year.
Yep. Stamps.com reporting earnings yesterday after the bell. Q4 adjusted EPS of $2.12 versus $1.03 estimate. So they crushed the earnings per share estimate. Sales, 160 versus $144 million. Importantly, guidance was good. The fiscal year adjusted EPS guidance way above estimates. They gave a range of $4 to $5. Estimate was down to $3.23. Sales guidance also above estimates. This is like the third quarter in a row that their guidance has been above estimates. Seems like.
Buy the dip eventually did work in this one. If you were the first one buying the dip at 200, it didn't work. If you bought the dip at 150, it didn't work. If you bought the dip at 100, well, eventually it would have worked. But obviously we went all the way down to $32. And then we just started climbing. And this was, towards the beginning of 2019. And in the last year, we went from $32 to $132. So it's been a nice comeback here for STMP. Ryan Craver, some props to him.
There you go.
He was banging the table on this one for a while. He's been on our show multiple times saying he liked STMP. So Ryan, if you are listening, nice call.
Yeah, very good call. Trying to get the highs of the pre-market session. 131.50 right there right now. Keep an eye on your pre-market high. I don't have my options platform open, but if you bought the 100 or 105, 110, 115, 120 calls, you could be locking in some profit on the dailies. There's just a big old, you're gapping it. This is like, I think the biggest gap into a gap area that I've ever seen in the markets, because there's a gap, all the way up to 200 or something. I had to go back really far. Oh yeah, if you're looking for a gap fill here, get your order out there 194.07 because the gap fill comes in at 194.08.
So if you heard Charles in the background there, I didn't mute my squawked. Charles is our guy who squawks on Benzinga Pro. He was just announcing and giving you more details on your story there, Joel. I'm sorry to let you know, but your LB is significantly underwater here now. And I thought this was kind of starting to turn around, but it looks like they were starting to turn around. They gapped up on the potential to sell Victoria's Secrets. It sounds like they did not get the money that the market wanted them to get.
No, not at all.
Well, they're only selling 55% stake, not the entire thing.
But that only values the Victoria's Secrets part at 1.1 billion. And I think the market was hoping that they would get a significantly more money than that. And you were seeing the stock get hammered here this morning. It's down 10% on this. So the hopes that they were going to get a big buck for Victoria's Secrets, which I don't know why the market thought that really, because Victoria's Secrets is kind of like the dog of it, isn't it? Isn't the good part of this company Bath and Body Works?
It has been the dog for a while.
Yeah, so they get rid of the dog, they get a big chunk of the dog, they get some money for it, and the market punishes it for it. So it's a bit of a head scratcher. I guess the market wanted them to get more money than this. So you got to look at, that bed or Bed Bath and Beyond. I want to keep saying
Bath and
Bath
Body.
and Body Works. Is going to be a standalone company going forward. So now you're valuing Al Brands for the bulk of it just on obviously Bath and Body Works.
You did sneak under $21 here, so you did get a gap fill, but I'll be looking for the gap fill in the actual market. That takes you down to 2077. So get down there, 2077, 21. All those people that shorted on the pop there, I think will be bringing it in. Not sure. I think they also had some changes in the C-suite here, but no big deal. I still got a ways to get even on this one. So this is a Lisa pick, so. I mean, I give her credit.
It was a Dennis pick too. Me and you both talked about it and bought it at the same time. We thought it was maybe a turnaround story at $32, and then it just stopped. Like it wasn't. It's just consolidated too long. If you look, us was probably back 2018-ish.
Yeah,
And I was like, you know what? I think I actually ended up scratching or taking a slight loss on it just because I didn't like the way the chart was performing. And I guess that ended up working out because obviously it's been beat up ever since. So I do take losses in my long-term account too if I think the story isn't turning around as fast as I want. When you're buying these turnaround stories, you want to see like immediate gratification because you get the timing wrong on those things and they can really stay ugly for a long time. I mean, everybody's been trying to call the turnaround of Macy's here forever. And yes, you have nice support, $14 to $15 area. But really, when you really analyze it, this stock has been dead money for 5 years. $70 back in 2015. We're $16 here now. People cite that nice, juicy 9.23% dividend, which they say they intend to keep. But, you know, eventually, intentions are always good. But eventually, you know, I think this still has the potential. I'm not saying it's going to, but the potential to go the way of like a J.C. Penney or a Sears. And that's the scary thing for Macy's. I know they have all the real estate and that's worth some money there too. And that's maybe why, you know, it does okay. And they'd still make money, but the growth is just simply not there.
All right, let's bring on our first guest of the day, Marc Chaikin from Chaikin Analytics. Marc, good morning.
Good morning. And it's good morning from Connecticut. So change the venue.
Nice. How are you, Marc? What's going on?
I'm good. Well, I think yesterday was a seminal day in this bull market. You know, I've been bullish for a long, long time.
Yes.
But some combination of millennials and short covering pushed the solar stocks and the semiconductor providers to solar beyond anything I've ever seen since 1999. So I think
they got crazy yesterday.
I think the theme here is, why did Morgan Stanley buy E-Trade? When did all this madness begin? Well, it began on October 3rd when Schwab made the bid for TD Ameritrade, and 2 days later, the Fed started injecting money into the overnight markets. I think there is a perfect storm there that has resulted in this huge rally, and now you've got millennials. By all counts, Fidelity said Space was their biggest, most active stock trade yesterday, and guess who's buying it? It's millennials, and guess who's buying solar?
It's anyone, but the fact that trading is so easy now, there are no commissions. It could be anyone.
That's right, but they're actually monitoring the demographics, and they were on CNBC talking about how the millennials were buying.
I saw
Space.
that segment.
Yeah, but I think solar is the bigger story, and that is also a millennial story. Millennials are
clean energy.
Clean energy. They're opposed to fossil fuels. That's why Bernie Sanders has this rabid support among college students. And I think the bigger story here is, are we in 1999? I haven't felt that way up to now, but when you look at these hockey stick moves in Tesla, in Enphase.
Enphase is what I was going to say. We were talking on the show yesterday after the earnings report, and it was $45. And I just said, I've always, you know, lost a lot of money trying to short stocks that are making new all-time highs. So I said, I'm absolutely not shorting it. But, you know, it's hard to chase them. I know at 45, 46 bucks when they're gapping up 15%. Man, if you were chasing that thing yesterday, you were immediately rewarded with another 20%. I mean, it's paying to chase.
But the earnings and the sales are there. I've got a friend in Houston who is retired and he's doing his own research. He bought Enphase this year at $5.
This year?
This year.
Yeah, that's incredible.
And Solar Edge. The one we talked about on the show months ago was SEDG, Solar Edge, because it had a bullish Chaikin power gauge rating. That jumped 20% yesterday on a good earnings report. So it seems to be the era of solar. And I'd just like to put a cautionary note in here market-wise. I love the market. It's what I called a month ago blue sky territory.
Yeah.
There's no resistance because the markets are making new highs virtually every week. But I think these hockey stick moves are reminiscent of 1999.
It's just price, people are just jumping on the train. The train's rolling down the tracks and they're jumping on more and more. And, and obviously, these moves can continue for a while. So they're very scary for, somebody like me who does trade both sides. I'm scared to death to short some of these things. Even, if you were just shorting Tesla on a valuation call or Enphase on a valuation call or anything like that, you're getting run over. You cannot short a stock when it's hot. You got to wait till they cool off, because I've been hurt so much just trying to call it top and say, well, there's so many fundamental managers out there that say, okay, well, Tesla's valuation makes no sense when it's worth twice as much as GM and Ford combined. But maybe that's the case, but I've seen, things get a lot more crazy. So
you know what the revenue for Virgin Galactic was last quarter?
No, they haven't even put anybody in space yet. What are your thoughts on SPCE?
Oh, it's crazy. Come on. Who knows when they're going to put someone in space and when they make money out of it. I have to tell you.
So the new millennials, let's just sum up here. The new millennials don't like fossil fuels. They like clean energy.
They want to go
like going to outer space. What else do they like, Mark?
Yes, Spencer.
What else do they like?
Spencer already booked the flight.
Well, they like free brokerage. That's for sure.
They like free trades too.
Everybody said millennials wouldn't come into the stock market, but you give them a razor blade and they're going to use it. And the razor blade is free brokerage.
Not Spencer. Look at that beard on Spencer.
I'm tired of being villainized here. Okay,
are you a millennial, Spencer? You're not a millennial. Are you officially a millennial?
Yeah, and you're almost one too.
I thought a millennial. Stop though. How do we define a millennial?
I'll tell you.
Yeah.
1981, so early 80s.
So how's Dennis falling
to mid 90s, early 80s to mid 90s?
And that's just because they say the millennial because you're a teenager when the new millennial turns. Because I would think, like, logically speaking, millennial should be a person that was born in the new century. Okay. Logic would say. Why do they call you a 1980?
You're Gen X.
No, that's Generation Z. And let's start shifting the blame onto.
Holy, I got to get my demographics book. Where's David Foote when I need him? I need to get my demographics book out here and start reading up on this, I guess.
Let's take a little poll here. Does anybody see a bit of irrational exuberance in the trading that we've seen in the last week?
But it's only in certain stocks, which is funny.
Right.
It's selective irrational exuberance.
Well,
but yeah, I mean, I don't understand. I haven't understood this market for a while, and I don't know if you're following, but if you're following me on Twitter, I've been saying, just jokingly, everything seems to be bullish, and it really is. I mean, you have Apple that gives a warning, and 2 days later, the stock's right back up at the highs. I mean, it's just buy the dip has just been rewarded. We don't care anything about the coronavirus. There's no fear about that whatsoever in the markets. There's fear on the streets, but there's none in the markets. I think the market's completely been irrational here for a long time because I don't think the coronavirus is a non-issue, and the market sure says it is a non-issue.
Well, here's what's really driving the market. The Fed started injecting money into the overnight repo market in October. Nobody quite knew what was going on, and they reiterated last week that they're going to continue to provide liquidity. It's just another way of saying QE until the April tax season expires. So I think this market has a bit of a free pass. In the 11 years that we've been going up since March of 2009, whenever the Fed was injecting liquidity into the market, stocks went up.
Yeah.
And when they stopped, stocks stopped going up. So I think this market has a bit of a free pass until the April earnings season, which means we can go anywhere. And right now, go anywhere means take stocks to the moon in this parabolic hockey stick pattern. And you're right, you can't short them. Justin Mamus wrote a book, When to Sell, and he said never short a stock making a new high. So you're channeling him, Dennis, very well.
Yeah, I didn't know him. I've just done it the hard way. I learned this hard, like grassroots. Like you go in there, you're like, oh man, I'm losing a lot of money here. I'm just scared to short stocks making new highs now, and I guess rightfully so.
But there's money being made in conventional stocks. We've talked about Leidos on the show, LDOS.
Yeah.
Incredible earnings. The stock spiked up 10%. There's just a dearth of supply the sellers are all out of this market. If you wanted to sell, you've had ample opportunities since October. The hedge funds are getting slammed because you can't have a hedge on that makes any sense if it's an equity hedge. And now implied volatility is starting to go up. So the options market is much more expensive as a way to hedge. I just think until April, this market is bullish, but I would really caution your viewers to be sensible. I'm going to channel Jim Cramer. If you're in any of these stocks, take 50% off the table and buy yourself a cashmere sweater.
It was an interesting segment last night. I'm glad you brought that up because Cramer just talked, because he's been talking Tesla forever. He's been talking a lot of these stocks, and he started the segment. You think, okay, well, he's been rah Tesla. He's probably going to be bullish Tesla again. And they were buying it up ahead of the Mad Money show, and it was trading over 920 again, figuring because Cramer was saying he was going to talk a little bit of Tesla. And he talks off the hop, and then he said, I give you permission to ring the register. And when he said that, Tesla fell almost 20 points on his comments. So it was 920. And if you look, Joel, and bring up the after hours chart, it went down to like 902 or 903 in the next 3 minutes, just because all the people who are listening, and there's a lot of retail traders in a stock like Tesla, like Jim Cramer said sell. And he didn't really say sell. He said start taking profits, but they interpreted that as sell and they slammed it down. And I do believe that's why we're seeing Tesla down 11 points here this morning. That's a little bit of a Cramer caution warning on Tesla.
Exactly. This same friend of mine who bought Enphase at 5 has been long Tesla since 280. And his take, and this is a guy who's been in Wall Street 60 years. He started 9 companies, sold them very well. His take is Tesla is going to be the biggest market cap company in the world within 10 years. And he's talking AI, solar, self-driving cars, the whole notion of clean energy. He just sees a picture that I never bought into, but when you add it up, I mean, they do have some really intriguing footprints. I personally think that BMW and General Motors are very slow on the uptake. BMW has unbelievable technology, but getting back to Tesla, there's a reason why they're in so many exciting markets, and it's the millennials who believe it, and God knows where it's going.
Mark, someone asked about crude here. Put it at a nice low under $50, trading up 38.6 cents here. I mean, it got pounded over the last couple months here. I don't know. Do you do a power gauge rating on any futures or?
No, we do it on the ETF. So
USO is a pain in the butt. But what do you think? What do you think about crude here at nearly $54?
I don't think it is worthy of an investment, personally. I think, the coronavirus is hurting in China, world, and they're a big consumer of crude. It's meh to me.
Mm-hmm.
I think the energy stocks are reflecting what's really going on in the fossil fuel market, and it's ugly. It's just ugly out there, and it's no place to bottom fish, in my view. The same way about retail. Why bottom fish when you've got defined industry groups that are just so strong, like software, semis, aerospace, defense? The final phase of a bull market is a continuation phase. It's not everybody, a rising tide raises all boats kind of market. And so USO and energy stocks have been off my list for 6 months.
All right, Marc Chaikin is the founder of Chaikin Analytics, longtime veteran of the markets. Marc, thanks so much for the time today. Have a good one.
Interesting discussion, guys. Be good.
As always.
Yeah, we could keep Marc on for a couple hours.
We could, but the show must go on.
I didn't even get to ask him about Morgan State, this whole deal and everything, but we'll get him on again.
Yeah.
Okay. S&Ps are trying to rally here. We've had a couple little spurts here for 33.80, but market just is a little tired here.
I think it's a little spooked from the couple deaths on the cruise ship too. Because we were trading up last night, and then overnight they announced that 2 people did die on that cruise ship, and they're a little bit spooked about that. We do see the cruise ship stocks trading down more than the market here as well. I think that kind of spooked a little. It gets a little bit of, do we know where those 2 people were from?
Well, there was also the South Korea The first.
Yeah, they've got some cases there too.
So something to keep in mind.
I think they're still, the market's going to, and it really spooked. I mean, we're talking about the market down 5 points, so it isn't spooked very badly. And we know when we look at the market at 10 o'clock, it'll probably be green again. But
yep.
It's so hard to stay, and like I said, I've been nervous about this coronavirus for a while. I'm so glad I didn't just try to just flat out short stocks. It's one thing, I bought some puts and, obviously I'm out to June. I'm going to have some expire this week, some of the shorter ones that I bought, but the bulk of the big chunk that I bought was out to June. I'm down about 20% in those puts, which isn't that bad because I went out so far. Part of me just thinks I should just take the 20% hit like on those puts and just get out. But I bought those for a reason that I thought, something could happen between now and June where the market gets a little bit more nervous. And I still think that scenario is on the table. I actually, it's probably, I never hedged myself right up because the tape never told me to. So I'm still, I was still looking at potentially hedging more of my long-term portfolio, but the tape, had that one ugly day and then that was it. And we've really, held up very well ever since. So it's tricky to just be short this market despite all of these potential worries on the table.
All right, let's go to earnings here. Let's move on to Dominoes. Back to the earnings parade.
Whoa, yeah. Dominoes.
Yeah, Dominoes reported
best chain pizza
this morning. I said that too, and I agree with you. Earnings per share.
Why didn't we buy the stock?
I don't know. Earnings per share $3.13 versus $2.98 estimate. Sales of 1.15 versus $1.12 billion. Comps for the quarter: U.S. comps 3.4%, international comps up 1.7%. They reaffirmed their guidance for the next few years, and sales growth is good.
It was a hell of a report. This is an unbelievable move. I just got done saying I've lost a lot of money shorting stocks, making new all-time highs, so I probably won't be shorting it, but man, to come in and chase this thing up $50. It's up $50. This is not some small company spec stock. I mean, you're talking about a move. And Domino's Pizza, this is the move. If I go back to the last 2 years, the whole 2-year range, last 2 years is 80 points. So in 2 years, this stock from top to bottom has moved at most about 80 points. Now it moves 50 points in one day on one earnings report. What do you think? Domino's Pizza's turning, Domino's Pizza's always been a good stock. It's always been a good company, but $50 is that's just like you reported on the right type of market where they just buy things no matter what. I cannot believe they're rallying this $50. It seems way overdone. But in this market, things just stay overdone.
Do you know where Domino's is headquartered?
Usually tell us. It's got to be Michigan.
Ann Arbor, Michigan. Ann Arbor.
Oh, yeah. Nice.
Yeah, cruise
Go
by.
Blue.
Go to the games, the football and basketball games. By the way, nice win for Michigan over Rutgers last night.
You know what's weird? Why are there like so many pizza chains headquartered in Michigan? Domino's,
Michigan likes pizza.
Little Caesars. There's at least 3 other smaller ones. Why are there so many pizza chains in this state? I don't know. Something to think about.
A pizza state.
Food for thought. Back to the chart.
I don't know. You know what I'm going to say about this one? I mean, take the money and run. That's what I'm just going to give.
Yeah, I take the money.
358. You're $11. You've leaked. I think you find sellers even at 350 here. High of the day is in, Dennis. I will go. I know you don't short stock, but I will go. The high of the day is in for a lunch.
Where's the high of the day?
358.
I like to go with the momentum, but I just think 50 points is too much on this thing. So I'm kind of on the same side as you.
That's all right.
I would not be surprised if it saw 358 or 360. It wouldn't surprise me whatsoever, but wouldn't surprise me for the thing to see 330. Either way, it was a good report. It deserves to be higher. Does it deserve to be up 50 points? That seems a little bit crazy to me.
And wow, Pizza John's is getting a lift off this too.
Papa John's?
Papa John's, what I call it.
I like Pizza John's. We're going to start calling that
Domino's
forever.
Could do the 30 minutes.
Wasn't this company in trouble at one time? Like, weren't they like talking like we got struggles here going on? This is back. Papa John's is back with a vengeance. Why is everybody eating so much pizza lately?
Should I tell my
you got vegan pizza? Did that Beyond Pizza? No, Domino's Pizza come out Beyond Pizza. They better if they didn't. I want to hear Beyond Pizza. I get so many good ideas for Beyond Meat. Why don't they put? Somebody said I should be on the board. I think I should.
the boneless or the
Beyond Pizza.
the
I'm gonna
meatless-
come, Joel. Me and you should just come out with a company. We're gonna call it Beyond Pizza. We're gonna attack Beyond Meat, and we're gonna make our pepperonis, made out of peas, and it's gonna be awesome. The dough will be all vegan, so it'll be good. Beyond Pizza, we're gonna
do a
I'm sure we won't get sued by Beyond Meat at all for that name.
We'll do a vegan millennial show, and we won't talk about Tyson Foods or Pilgrim Pride.
we don't talk about those.
We can talk about those. We would short those if we're doing the whole. And you know what? It's been Tyson Foods been in the gutter.
I just want to say that remember when Dominoes had the 30 minutes or less free delivery or free pizza? Do you remember that?
Yeah, I do actually.
Joel took advantage of that for sure.
No,
Well,
then it was recent.
I lived on a one-way street my senior year. And we would, if it got to like 27 minutes, we would go park one of our cars in the middle of the one-way street. So
Holy Joel, that's almost borderline evil. You know that pizza delivery guy, you got to take that out of his tips.
I know.
That's mean. You're mean back in the day.
Joel's not an expert.
Mean.
Okay, let's go to our second guest of the day. Jeez.
So mean.
Joel is so horrible.
Did Alan hear that? Did Alan hear that story? Because I got to get Alan Brochstein's thoughts on that story if he heard that.
Yeah, he's out one of those. Alan Brochstein from 420 Investor. Alan, good morning.
Yeah, I'm not talking to Joel. That's rude.
That was a mean story.
It's really mean. I wouldn't admit to that.
That's maybe my roommate's idea.
Yeah.
It was my roommate's idea. He's backpedaling fast on that one. Meanwhile, Joel was the mastermind behind the park the street so he can't get there. Alan, what's going on? What's up with you?
I'm getting ready to go to Florida.
Yeah,
You in Florida?
No, he's getting ready for our
Oh
conference.
yeah, the conference.
Yeah.
What's the date? We got to promote it here once again. When's the date, Spencer?
Monday and Tuesday. This coming Monday and Tuesday.
This Monday and Tuesday. Get away from the cold weather because it's bitter cold out there in Michigan this morning. It's 16 degrees Fahrenheit, so it's cold, cold, cold. Get down there and see Alan down there in Florida.
Here in Texas, but I think it's
Talking
16
Fahrenheit for it, Dennis.
It's 16 Celsius here, so still a little cold.
He's talking Celsius there. I actually always talk Fahrenheit because I'm from Essex County, which is like mini Detroit, really. We always watch Detroit television, so we're the only pocket in Canada that talks Fahrenheit.
Ah.
All right, Alan, give us a quick primer of what you're most looking forward to next week.
Yeah, it's interesting. Obviously, we're in some challenging times right now in the cannabis sector in terms of, a little bit on the operations side, some issues we've been talking about, slow rollouts in California, Canada, but more on the capital market side. And I'm glad to see, some of the leading companies are going to be at this conference. It's important to stay in touch with investors. And this conference has gotten a reputation as being the very best one for investors and for companies looking to connect with investors. And I think what's really interesting, the capital markets have kind of shut down for new companies right now, but I think people don't realize, like we just did an interview with a company that's on its way to 100 million in revenue next year, just out of California.
Wow.
There are a lot of private companies that are, I don't even know if they want to go public, but the industry, including some good public companies, is moving forward. And so I think investors that go there are going to get a chance to meet some of these private companies, see some of the public companies are actually moving forward despite their stock prices maybe being stuck in the mud. So I'm looking forward to that.
Alan, are you getting the sense that sentiment is turning a little bit, or are we not there yet?
I don't think we're there yet. It was an interesting end to 2019, the second terrible year in a row for the stock prices. And on the last day of the year, stocks surged like 6% and kind of saved it. I think it was the first month in 9 that the index was up, and it was like, not really, it was up like 1.5%. And then when we came into the new year, people started selling, and all of a sudden, Afria and Organogram reported in mid-January, and we had like this huge lift, and then we pulled back and made new lows. And then, it's kind of an instant replay. On Friday, Canopy Growth came out, and if I could summarize their report, it's like, oh, thank God the world is not ending, was really it. So a little bit of a relief rally that lasted all of one day so far. Although, the way I'd characterize the market is the leading companies in both the United States and Canada are basing. If you go back and you look October, November, December, and you go back even into July for some of the largest US operators, it's definitely in the basing mode, but we're seeing some of the other companies make new lows. So it's kind of a mixed market.
And going back to next week's conference, we're going to be hearing from executives from Iantis and TrueLeave and Akerna and GrowGeneration and a number of other public and private companies that are in the space. Is there one side of the market that you're finding is maybe has a different level of investor appetite than the other, or is it the same across the board?
No, I would say that investors over the last 4 or 5 months have really keyed in on access to capital and cash flow. And so I think that the companies that are kind of, as I mentioned, some of the leading companies are hanging in there. I don't think it's just because of their market caps. I think it's their access to capital. And, we've seen some of the largest multi-state operators access debt capital, access sale leaseback capital, things that are, it's not, as an equity investor, these things should be a little bit concerning potentially because, it exposes the company to some downside risk potentially. But at the same time, it affords them the opportunity to stay afloat, or I think actually expand when a lot of the rest of their competitors are going to struggle. So investors are kind of figuring that out. They've definitely started to pay more attention to the companies that have lower cash burns and good access to capital.
Give us a quick update on some upcoming legislation and any new markets that we should have on our radar.
Yeah, so this year's really interesting. We saw Illinois is the state. Chicago's the big city there. We saw Illinois legalize, and it's been quite a success, as I expected. It could always be better. It's supply constrained. That's the main thing. And they haven't even begun to really, they let all the medical stores or dispensaries become retail stores, and there'll be a lot more stores coming on, a lot more supply. That is going to inspire other states, I think, to really take a closer look, whether they're nearby states that are going to see their residents driving across the border, or whether it's the states, most importantly, out east. So we're already seeing a lot of potential copycats of states that are going to go through the legislative process rather than the ballot box. The ballot box has been the main way that states legalize up until Illinois. And so early in the year, we saw New York's Governor Cuomo talk about trying again after failing last year. We're seeing New Jersey embrace it, a lot of the smaller Northeast states, and I think you'll see more. Florida, there was a ballot initiative that failed, but the legislature, I'm not sure how it'll play out, is contemplating voting on it. So these things are hard to predict. And for investors, I think the important thing is there's already a lot of growth built into the system. California improving, Massachusetts rolling out, Illinois continuing to roll out. On the medical side, Pennsylvania is rocking and rolling. We're even seeing some deep South states get going, like Arkansas and Missouri. In Louisiana, I see Alabama now has some legislative on the medical side that's advancing in their Senate. So we're already moving forward. It's a question of pacing, I think. And, as you look out 5 years, a lot of people think this is a bet about national legalization. And I've said for a long time, that's not the bet I would make. The bet I would be making is that these companies can work through a myriad of challenges while it's federally illegal. And as the federal government updates its regulatory and political views. And so I think that's where we're headed. It's a good time, actually.
We're on the line with Alan Brochstein, author of The 420 Investor and founding partner of New Cannabis Ventures. Alan, I got a stock that I bought, and it's not doing very well. You mentioned it 6 months ago. And
I'll send you a check so you can pay the pizza guy. Now I get it.
Look at Spencer. Spencer's going to cry here. And Dennis, I don't want to hear anything from you about this, okay?
All right.
LQSIF.
Yeah. So
what the hell's going on, Alan?
Yeah. So what's going on? It's really tough because I think they're executing extremely well, but Aurora Cannabis is really struggling financially. No secret there, and they own a boatload of shares here. So I think there's some concern that they may dump those shares. So I scaled back. So you see that spike day?
That spike day.
So I actually added a little bit that day. But then as it recovered, I've been scaling back. So my exposure, my model portfolios is lower than I'd like it to be. That's how I'm handling it. This company's not going away or anything like that, but there could be a liquidity event. Just to use your imagination a little bit, you don't have to think that hard. They did a deal, Aurora did a deal where they disposed of some Green Organic Dutchman shares, and they sold them to a syndicate of brokers, and then the stock got cut in half. It was a disaster. So I think people will look at that and they feel like that may lay ahead. I think there's a more optimistic outcome. I just wish I could prove it. And if so, I'd be loading up. And that is, what if somebody thinks that entering the cannabis space, and Alcana is obviously liquor and cannabis, is a great idea. And they could just buy those shares, a strategic type of buyer. We've already seen Couche-Tard take a stake in one of their competitors, Fire and Flower. And so that's the optimistic scenario. I'm not sure how to handicap it. I haven't heard any rumors to that effect. I'm just kind of, telling you the sentiment's negative because it's Aurora stake, and it might not end as badly as some people feared.
Yeah, it's a much smaller part of my portfolio too.
Yeah.
That's the good thing about when you hold on to your losers. You just become a smaller and smaller part of your portfolio naturally.
Yeah. Well, I have to say, I became concerned. I sold some actually on the rebound just because I think this overhang, until it's taken care of, isn't going anywhere. Aurora continues to look for sources of cash, and that is an obvious one.
All right, Alan Brochstein, as we mentioned, will be at our Benzinga Cannabis Capital Conference next week. He'll be speaking. He'll be moderating a discussion with the CEO of GrowGeneration, and you can meet him and talk cannabis with him at the conference. Alan, thank you so much for the time today, and looking forward to next week.
All right, see ya.
All right.
Bye, Alan.
All right, 8:46 here. Shall we go back to the earnings parade, because there are a number of other ones?
Yeah, let's do our second earnings report here. 45.
We always get three in.
Third earnings report. Third earnings report. We did two already. Let's do. Let's just do Zillow. I was going to do Zillow because they're near the top of my up filter this morning.
Yeah, sure. We like the big movers. We like a good story here. We're always positive on this show.
Well,
Dennis.
I'm looking for the movers.
We'll have a real
little bit of sarcasm there.
Yeah,
I'm looking for the movers. All right, sheesh.
Zillow, wow. We want to talk about a mover. This stock was, just go whichever is your poison. You can go Zebra G or Zebra, whatever, which one you want. Just go to Zebra. It's simple. I don't have to type in the extra letter. Stock is trading up a cool $8 here in the pre-market, so it's a big move here for Zillow. And if you're looking November, this was $33. It's now $63, almost doubled in 3 months. It's been an enormous move. I mean, now at this point in time, you got to start looking, back to resistance levels, and we are getting back to where we were in June of 2018. So you run into that little dreaded double top up there at 65.70. I'd be more inclined to ring the register here on this one as well.
Yeah, I haven't quite got there yet in the pre-market trading. Pretty close though, 64.76. In fact, $2 off that. So use that area up to there as resisted. Street heading the right way into the report. Just 5 days ago, you could have bought this stock under $51. So I don't know, people ringing the register here, not chasing it on the long side and seeing if we can get through the pre-market high.
All right, you want to go negative?
Yes.
Give me some bad news.
Six Flags. This was
Is that still stock?
Expected a little bit. They were expected to
not expected that much. It's down 15%.
Well, yeah, right. The earnings were bad. That's not an entire surprise, and they were expected to potentially do something with their dividend, and they did cut their dividend in addition to the earnings miss. So an earnings miss and a dividend cut for Six Flags.
How much did they cut it?
This morning. Let me pull up the exact number here because I don't have it in front of me.
CFO's retiring, senior VP, all kinds of corporate shuffle up here too.
Cutting their dividend from 83 cents a share to 25 cents a share.
That's a big dividend cut. So if you were sitting here at Six Flags saying, how can you go wrong with a 10% dividend? This is how you go wrong when they get rid of the dividend or they cut most of it off. I mean, I've always liked FUN as a better stock than Six Flags. I think, it's a lot less volatile for one thing. It's held up. I don't know. This is just not a good story. Not a good story at all. And I don't see a turn. When they're cutting the dividend, does that mean there's a turnaround imminent here? Not really. I mean, we've seen, remember, not comparing it to Kraft Heinz, but when Kraft Heinz cut the dividend, a lot of people were all over it, and it's continued to drift down even after that. So it's tricky. When they start cutting the dividends, it means the company's got some serious issues.
You know why they're doing so bad? Because you don't need to go to these parks anymore. All you need to do it. Who makes the things or the virtual reality?
That's Facebook.
Facebook. That's all you need to do is
You
need
can
to
just ride the roller coasters
Yeah,
from
you
the
ride
safety
the-
of your
yeah.
own home. You don't have to worry about coronavirus.
Exactly. You don't have to worry about
Just stay
coronavirus.
home. I mean, that's what they're saying Zoom video. I mean, Kramer's been saying that for a while. This is the play. This is the coronavirus stock because everybody's using Zoom now. They don't need to go and actually meet in person. So nobody's flying to China for these meetings, so they just get on Zoom. We do it. I feel like I'm
Zoom's
sitting right
great.
next to you with Zoom.
I know. I know.
I don't know if it's-
Coronavirus
I
play.
don't-
So this is the anti-coronavirus play. You
know
have to
if it's
actually go to the
coronavirus.
park and ride the roller coaster.
Well, you did dip under $30, or you got near $30 here. Your pre-market low. Yep, 29.88. Panic low there. Some volume. Kind of been on the upswing since then. So I'd be more inclined to be a buyer if we pull back towards the pre-market low to cover a short. You are right here, right now, opening into some monthly support. I see some monthly support going back to 2014, monthly low at 31.77. And you also had a monthly low even going farther back than that, October of 2013 at 31.86. So you might have missed a low in here. Let's see if it gets down near 30. I think you find some bids here. Or anyway, I mean, you're already finding bids. You made the pre-market low, and then you've had a step-up buyer since then.
I am not coming in
I'm
any
not buying
stock
it.
that.
I'm not buying
So
it.
I'm not, and some stocks, they bounce back, buy the dip works. It doesn't work when the stocks are in downtrends and cutting the dividends. It doesn't work as well. So, I mean, buy the dip works on stocks like AMD that were in uptrends. Stocks like SPWR that were pretty hot. I mean, I cannot believe I almost want to just ring the register. Like I said, I bought this dip, 2 days ago at $8.30. It's $10.42. I got all those losses back. But it was a stock, the solar stocks, like even, like we were just talking with Marc. The solar stocks are loved by new millennials, and these are stocks that they come and they buy back on the disappointing numbers. People looking to get into those. I mean, this is and AMD is just a poster child. Everybody loves AMD. The thing goes up every single day. I mean, it was down for 2-3 days after the disappointing numbers, and then they ripped it higher. So I wondered. I actually took a flyer in Pinterest yesterday too, and I'm long it still. It kind of put in a double bottom. You see what I was looking at there, Joel? 2266, 2264.
You were talking about that last week too.
Yeah, I was waiting for it to put in like two lows in the same area, and it did. I didn't know that, but I ended up buying a 2285 yesterday for a swing trade. I'm still in. I sold half. So I sold a chunk because it ran $1, and I was like, oh, that's a pretty good move, and it was just a swing trade, and I was taking, fairly low risk. I literally had my stop like at 2255. So I had my stop just sitting there. If it made the new low, it did not, obviously, and then it ripped higher. But you know what? This sets up not bad too. So I took a little bit of chunk of it. And then I'm holding on to the rest of it. But it's the kind of stock that does bounce back because there's a lot of people in the younger generation that uses Pinterest too. And it was a good earnings report. It filled the gap, and Twitter did the similar thing. Twitter had a good earnings report, started coming back in afterwards, and now it's showing life again. So I could see Pinterest doing the same story. That's why I am long Pinterest right now. Not trying not to sell if it moves up really substantial, because this is in the swing trading portfolio, not the long-term account. So it's of my swing trades right now. I think Pinterest is my only one on it. So I have LAKE on for a swing trade too, because I still think the coronavirus. I think masks are going to be coming back up eventually. Those are my only two swing longs on right now.
So you just ripped off about 5 stocks there. What?
3.
3.
Well, let's get I want
actually, maybe it was 5. I don't remember where we started.
Like I pull up the chart, and then I pull up the chart, and then I pull up the chart. For your pins, you're up 14 cents at 23.74. Man, you want to see this thing over $24, Dennis. Your last 3 highs, 379, 369, and 386. So I don't know, someone lurking here just under 24. You clear that. You could.
It's up this morning too.
Yeah,
that's a good sign when the market's getting weak. There's follow through buying here.
Yeah, so
I like it.
You got yourself in, get yourself out.
I like it.
Okay, so because we're going long today, we will have time after 9 to do more tickers from the chat. So I'm keeping one eye on the chat. I'm writing tickers down as I see them, and we'll get to those.
You're actually following the script today?
I'm trying to pay closer attention to the chat than I have been. So I'm writing a few down. I saw someone suggested Tyson. Someone suggested Groupon. We will get to those. I promise. I do want to get to at least a couple more earnings reports. And I'm just again going back to the biggest movers. What's moving this morning? By the way, E-Trade has settled down here. Seems like it's found its level for the day.
Well, it's Morgan Stanley it's trading off of now. So don't even look at the individual price action on E-Trade. Look at the individual price action on Morgan Stanley. It will chase that around to that ratio 1.0432 minus that 80 cents to $1 discount that the risk arbs are pricing in. Obviously, just for the deal potentially not going through, but it looks like with only 80-cent discount, they're pretty comfortable. More time value of money in that than anything.
Yeah. I wanted to do SolarEdge, which we had sort of discussed, but they had earnings yesterday after the close. The earnings per share beat $1.65 versus $1.25. Sales $418 versus $413 million. So a beat last quarter for SEDG. Their Q1 sales guidance also came in above estimates, and I think we talked about
these two stocks, this Enphase and SolarEdge, have just been ripping. SEDG went up 17 points yesterday on Enphase's earnings. So this thing was priced for perfection coming into the report. And you would say, like going up $17 a head. And then they reported and they actually hit it down a little bit, but they blew the numbers away. But it was priced so for perfection, they actually brought it in just a little bit. It was trading down $3-4 for a while. Well, the new millennials won't let the stock stay down, and they bought the thing right back up. I mean, again, we're at a story here. Like I just got done saying, third time on the show, I've lost a lot of money shorting stocks, making new all-time highs, so I would not short this. Same setup as Enphase really yesterday, although it's already had a big move, so I don't know if this got more gas in the tank, but I don't know that it doesn't. So that's why I'm definitely not shorting this thing. But I don't like chasing stocks.
Blew it away.
Would have worked yesterday in Enphase, though.
Yeah, trading at the highs of the pre-market session. It's really only thing I can give you. That's 137.30. So you have faded off that. Your last print 134.70. So if I have to give you an upside target there, I'd say, hey, get out there 137. See if they take you. If they do and continue higher, then put more out at 138, 139, 140.
Yeah, but this could be one that could rip on. Enphase, let's just put this in perspective. It was 45 when we talked about it. It went to $57. I mean, this SolarEdge, this could see $150. It could happen. I'm not saying it's going to. Oh. It had a big move yesterday, but it was a good earnings report. There's nothing in here. I mean, don't just think this thing has to stop because it's up $7. I mean, a Domino's pizza is a safer short, even though it's kind of starting to go up too, than a SolarEdge. I don't want to short any stock making a new all-time high, but these solar stocks just get crazy. This can go like, not Tesla crazy, but half a Tesla crazy. That Enphase was a huge move yesterday. I would not want to be short this stock right now.
All right, what about Avis Budget?
Oh man, people are still renting cars, huh?
I can't.
Apparently so. Apparently so. The Q4 EPS 73 cents versus a 50-cent estimate. Nice beat. Sales also beat 2.16 versus $2.08 billion. So beat and a beat for Avis last quarter. Their fiscal year EPS guidance coming in line. Their sales guidance coming in line, actually above estimates. So strong quarter for Avis.
Congratulations, Steve Grasso. And we see he's pitched the stock got to be 4 or 5 times on Fast Money in the last year, and you've been right. So, Steve, you're listening. Congrats on this one. Car has worked out for you.
I wonder if he's just a CNBC.
Can we get Steve, or has he got an exclusive and he won't come on?
I don't know.
So some of these CNBC guys can't come on. We got Tim Seymour coming though.
How about in 2 minutes we asked Tim to ask Steve?
We got Tim. Tim's awesome. Can we get Steve on? We love Tim.
Let's hold out maybe for 49.70, or I'll just call it 50. I like that area. 49.70 was your high in April of 18. 50.30, or I'm sorry, in May. April was 50.32. Nice round number. Hasn't been up near $50, as I said, in a long time. So that's only $1.50 away, just hanging out here at the highs of the pre-market session. The actual high, though, was on the initial bump at 49.66. So maybe you just got a patient seller up there between 49 and 50.
All right, let's bring on Tim Seymour now. He is the CIO of Seymour Asset Management. Tim, good morning.
Good morning. How are you guys?
Good. Want to get your thoughts before we get into the cannabis stuff, just about this merger this morning or this acquisition.
Yeah, pretty extraordinary stuff. Obviously, what we've seen is this consolidation in the online brokers and some secular trends that are going on with fees in the sector. And there's some element to this deal though that kind of feels market toppy to me. I realize that this deal makes sense when you consider all those other things I just mentioned, but this is this is kind of extraordinary. I think it continues to cement Morgan Stanley's place as really, I think, the leader in wealth management, and arguably that's where they took this franchise after the financial crisis and kind of realigned how they were conducting core business. And so this is now Morgan Stanley Digital Bank, gets them more into the commercial and the banking services around the client base, as opposed to less focus on investment banking. This is my interpretation. This doesn't change their the core IB strategy that exists today, but for tomorrow, this is where they see the world, and I think they've taken a clear step ahead of others in space.
And I wonder when Goldman's going to hop into this fracas here. Actually, over the weekend, listening to the radio, I heard for the first time ever, Goldman Sachs. Did you hear those, Spencer? Goldman Sachs advertising, I don't know if it was a credit card or cash back.
Yeah, Goldman doesn't advertise that much. That's a good point.
Yeah. Very.
Well, I mean, so if this whole Marcus business that they've set up, which is providing retail services on a very personal level. The fact that they've moved in with a credit card with Apple. I mean, Goldman Sachs has certainly followed a path that's also moving in a direction where a core institutional blue chip client base is not the only way they're getting business done. So no, I think Goldman Sachs understands the world has changed.
All right, Tim, we asked you on here because you are going to be all over our cannabis conference next week, Monday and Tuesday. What are you most looking forward to?
Yeah, why do I only get invited on this show right before one of your conferences? I mean, this is absurd. I thought, and by the way, I thought I was brought on to talk about hockey. And I know we want to get into the Houston Astros and what it means as we have spring training up and running. I mean, first of all, how about my Rangers coming into Chicago last night and just absolutely dismantling the Hawks in an original six matchup that I'm sure the entire country was focused on last night. So good stuff, right?
That's a big win. That's a Benajad kid and Panarin. You got some players there. You got some hope there in New York.
We got some players.
Good young goalie.
We have. I knew Dennis would take the bait here. No. No, we do.
I'll talk
nice
hockey the whole half hour with you here, Tim.
I know you would.
He'll lose money to talk hockey because no one will talk hockey with him.
All right, how about baseball?
I'll forgo even trading the Open just to sit here and talk hockey all night. It's a good year. I'm an Oilers fan, so it's been a pretty okay year until Connor McDavid got hurt last week. But I mean, it's been. I know.
No, we miss him. All right, so you guys have asked me about cannabis and the event next week. So I am fired up to be in Miami. I think. Benzinga here's the paid advertisement that nobody paid me for. I mean, this is an event that is a nice combination of major industry corporates. I think key institutional hedge funds and dedicated investors to the space. And then also, frankly, it's a forum where self-directed high net worth and kind of retail folks who are excited about cannabis for the first time or have been in this industry for last 3 or 4 years can go. And I actually think that's one of the great parts about this event is it's institutional in its approach, but it's not necessarily restricted to that world. And so we're excited to be there. There's no lack of news flow coming out of this sector, not surprisingly, and it's I think a year ago we were in Miami with a very different sentiment on the industry, and it's not a bad thing that things have cooled off. It's not bad at all. In fact, it's probably very healthy.
Price just probably got ahead of itself. And I mean, in some of these cases, obviously valuation got ahead of themselves too. But there's going to be some big survivors here. And industry is not going away. And you look here, and obviously a lot of these stocks are trading near the lows, but there's got to be some opportunities here as an investor. What if you just could pick a couple of, and I don't want to throw you on the spot, but just a couple of stocks. I know you've got a few that you like, but which companies would you focus on that you think could be the ones that could be here for the long term?
Well, first of all, just the sector overall valuations didn't make sense out of the gates because of the restrictions on capital into the industry, and effectively Canada, which is federally legal, was the place that U.S. companies were going, and the United States, which was not federally legal but certainly accessible to Canadian LPs, was the place that they were going. So it created this mismatch in terms of valuations. It created a dynamic where also effectively share prices were used as the currency in which companies were then doing corporate finance. And while that does go on in a more traditional corporate M&A world, it is perversely overdone in the cannabis world. So you got to a place where valuations never made sense. Yes, you can look at Tesla or Virgin Galactic and say they don't make sense in a lot of places, but I think in this case, the good news is that the addressable market and the growth and the top-down story that everyone was so excited about in terms of just consumption and classic CPG, this is a story that will look no different than many other consumer product classes in terms of the sophistication of the companies, but the distribution, the branding, the logistics, the ERP, and that's actually playing out. So I think in terms of names in the space, in the U.S. you've got a handful of multi-state operators that I think are separating themselves from the pack. They are doing that because not only are they showing a path to EBITDA profitability, but they've I think largely focused on their balance sheets. They fortified their balance sheets, and they're able to withstand a really challenging period in the capital markets. So, I mean, look, the names in the U.S. that right now, both from a balance sheet perspective in terms of some of their operating earnings, I think over the last 2 to 3 quarters, Curaleaf, Cresco Labs, GTI, these are companies that are on kind of a multi-state capacity have done very well. TrueLeaf down in Florida is a little bit more of a call it a vertically integrated single state model. At least they have a dominant position in Florida. These are all names you can trade in your E-Trade account that might now be a Morgan Stanley account. But no, I think it's, the Canadian LPs, of which we started to get earnings last week. You had Aurora early in the week. You had Canopy that delivered on Friday. Kind of mixed stories between Aurora and Canopy. Aurora continues to see deceleration in their top line and their profitability, and frankly their gross margin. And I think people are a bit concerned about continued impairments and where also the balance sheet is going to need some fortification. Canopy Growth doesn't have the balance sheet issues. They have, I think the most important thing to say there is they've got a management team that's taken the helm after, so people talk about 2.0 in terms of the cannabis products market in Canada now coming forward with edibles, gummies, any type of beverage market, et cetera. But really 2.0 should be more about what's going on with management teams and the next phase of growth for companies and what it looks like. And the leadership at Canopy is a very experienced consumer products team that's come over from Constellation Brands and knows what they're doing and is focused on profitability. So I think that should be interesting for investors. It doesn't change the fact that Canopy's not a cheap company, and Canopy may also have to write down some more assets. But I think they're on the path to profitability, and I think they have a balance sheet that means they can be opportunistic in this environment. So those are things like $1 invested today versus $1 invested at the Miami conference 2019 for Benzinga is a very different place. And I think if you look at Canopy growth as just a proxy, so let's just use that as the biggest name that people could have traded. It's actually outperformed the S&P since the middle of October by whatever 1%. You can pick any point and lines on a chart. You guys know this. You talk about it every day and make whatever case you want. But I'm not going to tell you that the publicly traded cannabis market has bottomed, but I'm going to tell you that there was a necessary shakeout, and that actually a handful of companies have done quite well. And that, as we like to say, and I've probably said no less than 150 times on Fast Money over the years, you make the most money when things go from terrible to just bad, and that's part of what I think we've seen in the cannabis sector. But the good, I just want to be clear, is I don't. I was listening to Alan for a couple of seconds before I tuned in with you guys, and Alan's one of the leading voices in the industry, and Alan talked about he's not really counting on a federal a federal green light. I totally agree, and I think so. The better part of the story is look what's going on the state level. Look at the legislative evolution and what we have going into the 2020 ballot in a handful of states. People didn't think we're going to be going full rec or even medical. You've got a lot of progress: South Dakota, Missouri, New Mexico. You name it. It's actually happening on the state level. In the Northeast, you've got Cuomo, who effectively, the way you'll get the adult market passed in New York is different than you would in other states, and it's not necessarily going to a ballot. And therefore, I think this is more of a mandate that's coming through from the governor's office with the necessary social and kind of criminal justice attention. And now it looks like you've got the framework for New York, New Jersey, Connecticut, and then Pennsylvania, which is already a medical market, but also to go adult. So that will happen, in my view, sometime in the next 12 months, and that's going to also be just very important for, again, the top-down market in terms of the addressable market and why people are excited about this sector. I don't think you need the federal government to decriminalize to get good news.
All right, Tim, real quick before we let you go, and I've been asking, we've had some different industry guests on here, and I just talk about like the black market, and someone is asking here oversupply here. So, I mean, is that something that, is just not going to go away, and that's going to be a big impediment to this, this industry taking off?
The black market exists because it's free of regulation, and it's on some level it can exist at a cheaper cost base, and that will not go away overnight. But people want regulation. Consumers want regulation. The companies want regulation. The industry wants regulation. So, look, in California, I think that state is as a leader in the industry has also made some leading mistakes in terms of how they were going to regulate or not regulate, and also how they were going to tax their industry. The producers, the retailers are overtaxed in California, and they've created an environment while the perception change socially and otherwise has made it so nobody cares, and everyone's accepting that this is an industry that's growing. So black markets never had a better environment to live and thrive. That needs to change. But the pricing, first of all, of premium flower and in a handful of markets, and look no further than around you guys regionally in Illinois and in Michigan. I mean, prices are actually they're holding up dramatically. I mean, the cost of pound in the wholesale markets in Illinois is up near $4,000. So you have. I don't believe that, any commodity market has a supply-demand response, and therefore, yes, in Canada, you have absurd amount of production for a market that's just not that big. But that's not what you're investing in the industry. So people that are focused on the prices and supply-demand dynamics, yes, that makes some sense to determine short and medium-term pricing trends, but I don't think that's really what's driving it. Like the hemp side of this industry. So after the Farm Bill, I mean, if you want to look at where the legal market and pricing is plummeting, biomass and isolate prices on the hemp side are plunging because there is too much supply, and that market is being constrained a little bit by the FDA. But yeah, I think black market dynamics are make for important headlines and an addressable dynamic that the industry needs to continue to overcome. But the industry wants regulation. The industry wants consistency. The industry wants safety. The industry wants the ability to deliver products for investors in a controlled environment. And that's really what consumers want. And when you get that, you're then going to get, and this is going to also require a legislative process, you're going to get some of the biggest consumer products companies in the world that are coming into this space.
All right, Tim Seymour is a panelist on CNBC's Fast Money. He is the CIO of Seymour Asset Management. He also is the portfolio manager of the Amplify Seymour Cannabis ETF, ticker on the screen there, CNBS. Tim, looking forward to next week. Thanks for coming on.
Guys, this is great, and we whenever you're ready to start our weekly hockey morning show,
we're all over it. We're going to extend this into a hockey
Stocks
show.
and Jocks on Tuesdays in Chicago.
He does. Joel does do Stocks and Jocks.
I know sports like anybody, Tim.
Just not hockey. All right, thanks a lot, Tim.
Awesome, guys. Take care.
All right. Before we get to our next guest, I just want to do Tyson real fast because someone in the chat mentioned it, and they did warn yesterday about the coronavirus having an impact on the business. So I'll just pull up the chart. Joel, give us some levels here on Tyson, and then we'll go to
just giving. Let's see here. Is this?
We're done. The millennials don't eat chicken.
You know what? Lisa's been cooking a lot of vegan dishes too lately.
I'm telling you, I've kind of, the only thing I do eat some chicken still, but I've been trying to go a little bit more vegan with my diet too. A little bit more.
77.82. That was the low from yesterday. Just hanging out at 78. Absolutely have to hold yesterday's low at 77.82. If not, your October low was 77. So it's kind of hanging in there, but opening into the previous day's low, next support 77.
All right. I do want to bring on our final guest of the day, Michael Salaman. He is the president and co-founder of GrowGeneration. Michael, good morning.
Good morning. How are you, Joel?
Doing okay. Michael, your co-founder will be speaking on a panel with Alan Brochstein at our conference next week. So we're looking forward to that. But real quickly, just give us a quick I know that GrowGeneration is a supplier, industrial supplier, but give us a quick rundown of GrowGen and what you guys are doing.
Yeah, GrowGeneration is the largest supplier of hydroponic equipment and supplies to the commercial cannabis license marketplace. We started the company back in 2014 with the mission statement of becoming the largest chain of hydroponic garden centers. And we've accomplished that in less than 6 years. The company this past year did about $80 million in business, and we were honored of being uplisted to the NASDAQ exchange. We rang the bell, which was really exciting for our company, a major milestone on December 30th of last year. So our business is growing, dramatically and taking advantage of legalization across the country.
And I just looking at your chart here, and it does not look like most of your peers. It's going up and to the right. So you must be doing something right.
We're a very discipline-based company. My partner and I started the company, really from the perspective of being a profitable company. We built this company organically. We started back in 2014 with a small acquisition. We did $2 million our first year. Second year, we doubled sales. We've been doubling sales literally every year and doing it in a way in which, we were looking towards, profitability. This past year, we achieved that goal and was profitable. We've been profitable really for the last 4 consecutive quarters and certainly continue to focus on margin expansion, EBITDA, and you can see the reflection of the price of the stock, finally, catching up to where the company is and where the company is going. This company has tremendous, pipeline of acquisitions and opening up, new markets. I mean, we're still, in the early innings of this legalization process of cannabis. And this company ended the year at a run rate of over $110 million of business. And we're still not even, generating any revenue out of New York, New Jersey, Pennsylvania, Florida, Illinois, Arizona, all new markets that are ahead of us. And part of the strategy for the company is also to acquire the best of breed of these hydroponic operators. And we have the capital, we have the resources, and most importantly, we have the management team that's able to assimilate these companies that have been in existence, that have customers, that have revenue, that have profitability. We're able to bring it all together under the GrowGen umbrella.
Right. So Michael, you're in 9 states. In which of those states, I guess, can you just talk to us about the demand and the supply in each of those states, and which markets are hotter or not right now?
I mean, our business is really based upon the number of licenses that are given in a particular state. Oklahoma is exploding. There's 5,000 cultivation licenses that were issued. Not all are active, but our company was a first mover to take advantage of that leniency from the cultivation side. We have 3 locations opened already in the state of Oklahoma. We're in the process of opening up our 4th location, which will be the largest hydroponic retail garden center in the United States. It's a 40,000 square foot facility in Tulsa. But we see growth in all the emerging markets. Michigan, we have 3 locations. Even mature markets like Colorado, where you now have Wall Street investment coming back into the market that wasn't allowed until this past year. And we see guys, expanding and really reinventing their cultivation facilities and using the state-of-the-art lighting technology and nutrient technology to make their operations more efficient, to get a higher ROI. And GrowGen is in the middle of all of those conversations, in the middle of assisting and working arm in arm on the purchasing side and the supply side to provide these growers a strong return on their investment. And I think that's why we're able to acquire customers and retain customers.
Michael, looking at some of these stocks, the producers and everything, and the charts are not looking so good. I mean, is there something else lurking out there, like big tobacco, or someone else coming in that just say, okay, all these little companies are going to go away. Hey, we're the big boys, maybe a big farming corporation. I mean, I'm looking at the stock of like Philip Morris and some of those other tobacco companies. Do you think that's something that's a big overhang on the stock on these stocks? Some of the big boys are going to come in and really get active and take market share.
I don't think so. I think, the market is really a state regulated market. And I see that continuing, even with federal regulation, which would only help these companies from a banking perspective, but the state rules are going to stay in place. And I still think you're going to have, state by state regulatory environment. Big tobacco, if they decide to come in, they would come in through an acquisition. The MSOs that are out there, they put a stake in the ground. They have vertical integration. They have branding. They have product. They have distribution. So I think it would be difficult for even a large group to come in other than through an acquisition model. And that's certainly, a possibility. But we're very bullish. Our customers are the big MSOs. We work with most of the US, we're not active in Canada today. We're very active with all the MSOs in the United States, and they're growing and they're expanding. And that's great for GrowGeneration's business because we're following their consolidation, their acquisition strategy. And because of our ability to provide, an end-to-end solution for these MSOs, we're able to, work these MSOs in the United States. And we see them, growing and certainly becoming, more profitable. And we see tremendous upside here in the United States from the, big MSO side.
Michael, is it fair to call GrowGen the Home Depot or the Lowe's of pot? Or do you hear that a lot, or did I just?
We do hear that a lot. I mean, it's certainly a compliment. Bob Nardelli is a senior advisor to the company, and we had the pleasure of walking the floor of their main store, Home Depot, with Ted Decker, the head merchant down there. And it was a wonderful opportunity for our team and our staff, to understand the inner workings. And we certainly see a lot of parallels if you go back to the early stages of how Home Depot, started and how they expanded and opened up more locations and created a pro services, operation, which GrowGen is very focused on developing its commercial business. But we also entertain 8,000 to 10,000 people a week that walk through any one of our 26 locations. We see the omni-channel approach of having customers, accessing our internet and our inventory online and picking up, in store. So there's a lot of similarities. We're certainly a much smaller company, but we see tremendous growth and we don't see the end of it. And it's certainly paralleling the growth of the cannabis space. And GrowGen is in a unique position also to expand, because we're in the hydroponic supply business. There's other vertical markets, including hemp, including organic produce that's grown hydroponically, that GrowGen can seamlessly enter into those very large multi-billion-dollar markets in addition to the cannabis space.
All right, we've been on the line with Michael Salaman. He's the president and co-founder of GrowGeneration. He'll be at the Benzinga Cannabis Conference next week, as will his co-founder, Darren Lampert. Michael, thanks so much for the time today, and we are looking forward very much to the conference.
Thank you, gentlemen. Much appreciated.
All right. Joel, I just one more.
One more shot?
I want to get to Groupon. Somebody had mentioned Groupon in the chat like a half hour ago, and I promised myself I'd get to it. And they had earnings a couple of days ago. We didn't discuss the earnings on our show. It wasn't great, but someone had asked us to look at Groupon. So pulling it up on the screen here, and let's take a look.
They're getting out of some business, and they are doing a reverse split, right? I think that's what I read. I don't know. It closed on the low of the session yesterday, so I guess you want to see a $1.70 hold here. $1.70 was the low. That was a closing print. Looks like a lot of people threw in the towel yesterday. Average volume is around 456 million shares. 156 million shares traded yesterday. So maybe everyone that wants out is out. Let's see if you can put in like a little double bottom, triple bottom or something, a couple areas to lean on. And then I think it's hard to get real interested on the long side until you get back over that gap area over $2. So just maybe wait. Just be a little bit patient here. See if you can get a technical formation to lean on. But it looks like a lot of people threw in the towel on Groupon yesterday.
All right, we're going to hop off here just a few minutes before the open. If you missed any part of our show, catch our podcast or rewatch the show on YouTube. To learn more about the Cannabis Capital Conference next week, go to benzingaevents.com. Can buy a ticket and learn about how or who will be there, what will be discussed. So benzingaevents.com for that. Give us a call, 734-494-0246. Email us premarket@benzinga.com. I want to thank all of our guests today, from Michael Salaman to Tim Seymour to Alan Brochstein to Marc Chaikin. Thanks to everyone in our chat on YouTube and premarket.benzinga.com. And please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. I think that's it for me, Joel. Any final thoughts, or do we
Boy, we covered a lot today.
Covered a lot.
The pre-market low, that's a good target on the downside, 75.25. We're bouncing up now. Just can't get this area, this all-time closing high, 87.25 out of my mind. It's also mid-range on the session at 86.50. So any early pop, better get over that, better clear that, or I see more downside in the market. Your better support here, 33.70. That's Wednesday's low and Tuesday's close right in that area.
Everyone have a great rest of your day. We'll be back with you on Friday.